Do you know the top 5 chart patterns every crypto trader should know? In the world of crypto trading, chart patterns play a crucial role. They're like the secret code to understanding market trends, predicting potential shifts, and making informed trading decisions. These patterns can give you insights into the market's heartbeat, helping you anticipate trend reversals or continuations. So, whether you're a seasoned trader or just getting started, chart patterns are a tool you'll want to have in your arsenal. Stay tuned as we delve into the top 5 chart patterns that can enhance your trading skills. First on our list is the head and shoulders pattern. This chart pattern is one of the most reliable indicators of a possible trend reversal. Picture this. You have a peak, followed by a higher peak, and then a lower peak again. These form what we call the left shoulder, the head, and the right shoulder, respectively. The line connecting the low points after the first and second peaks is known as the neckline. This pattern is often seen in bullish markets and indicates a potential shift from an uptrend to a downtrend. For instance, consider the recent bullish trend in the Bitcoin market. If we were to spot a head and shoulders pattern here, it could suggest that the rising trend may soon take a downturn. However, remember that chart patterns are not foolproof. They're just tools in your trading toolbox, and it's crucial to use them in conjunction with other indicators and strategies for risk management. Mastering the head and shoulders pattern can give you an edge in spotting potential market downturns. So, keep an eye out for this pattern, and you might just catch the market's next big move. Next up, we have the double top and double bottom patterns. These are two of the most reliable chart patterns that traders use to predict potential trend reversals in the market. The double top pattern forms when the price of an asset, such as a cryptocurrency, reaches the same high point twice before declining. This pattern signals that the asset is likely to undergo a bearish reversal. On the flip side, we have the double bottom pattern. This pattern forms when the price of an asset hits the same low point twice before bouncing back. It's an indication that a bullish reversal is on the horizon. Let's look at some recent examples from the crypto market. Imagine you've spotted a cryptocurrency that has hit the same high point twice and then started to decline. That's a double top pattern in action, signaling a potential drop in price. Conversely, if you see a cryptocurrency hitting the same low point twice before bouncing back, that's a double bottom pattern suggesting a possible price increase. With the double top and double bottom patterns, you can better anticipate market reversals and make informed trading decisions. Last but not least, we have triangles, flags, and pennants, and the cup and handle pattern. Let's dive in. Triangles come in 3 varieties: ascending, descending, and symmetric. Each type forms when price action narrows between support and resistance levels, indicating a potential breakout. For instance, an ascending triangle, characterized by a flat resistance line and upward sloping support, often signals bullish momentum. Next, we have flags and pennants. These patterns typically follow a sharp price movement and represent brief consolidations before the trend continues. They resemble their namesake shapes. Flags appear as small rectangles, while pennants form small symmetrical triangles. The key here is that the initial price surge is the flagpole, while the consolidation forms the flag or pennant. These patterns often imply the continuation of the initial trend. Lastly, the cup and handle pattern. This pattern resembles a teacup on the chart and indicates a bullish trend. The cup forms when prices drop and then rise to the same level, followed by a handle that's a small downward drift. When prices rise above the handle's resistance, it's a signal to buy. Remember, these patterns are not foolproof, but they provide valuable insight into market trends. And in the fast-paced world of crypto trading, every bit of information counts. These patterns are invaluable tools for predicting market trends, helping you to navigate the volatile crypto market effectively. Let's recap the top 5 chart patterns every crypto trader should know. First off, we delved into the head and shoulders pattern, a reliable predictor of market reversals. Up next, we explored the double top and double bottom patterns, both of which are powerful tools to anticipate potential price movements. Then, we ventured into the world of triangles, ascending, descending, and symmetric, each carrying their unique significance in trend continuations and reversals. We also touched on flags and pennants, an integral part of the crypto trader's toolkit for their role in signaling short-term price breakouts. And lastly, we unpacked the cup and handle pattern, a pattern known for its ability to forecast long-term bullish trends. These patterns are more than just shapes on a chart. They are the keys to understanding the crypto market's language. Their importance lies in their ability to predict market trends, giving traders a head start in this volatile landscape. By mastering these chart patterns, you can enhance your trading skills and navigate the crypto market with greater confidence and success. Thank you for watching. Until next time.